Good morning, everybody. This is the Live Market Open show on Monday, October 6th. I'm Yohay Elam of ForexCrunch.com and Market Movers podcast, doing this show for FX Street. You're all welcome to play along, participate in the chat, and ask questions, and we'll be glad to hear from you. So what's going on in markets? Well, we had Friday, the non-farm payrolls, and it was just terrible. Let's take a peek at the data and then look at what happened. That's the most important thing, still echoing in markets. So we had only 142,000 jobs gained. Expectations stood at around 200,000 like in previous months. And instead of getting positive revisions, we had negative ones. So 59,000 jobs that were officially gained in the previous months in July and August were actually erased. Usually there is a positive revision for August. So that's the second disappointment. And of course, wages, not only do we have less jobs gained, but these jobs are not good enough to push salaries higher. So month over month in September, we had no change, 0%. And then this means year over year remained at 2.2%. Still within the range, nothing exciting, nothing accelerating. And we still had the unemployment rate remain at 5.1%. So if you look only at this figure, you could say, well, it's actually good news, right? But it came on top of the participation rate falling down to levels last seen in 1977. Okay, so that's when less women participated in the workforce. And this figure doesn't mean only drop because of demographics, because the population is getting older, but also because less people are officially in the workforce. So it doesn't look really good. The dollar fell and then recovered. Let's look at the charts. Here's euro-dollar. Let's look at what we've seen on Friday. This is the 1 hour chart. We're seeing this rise right here to almost just above 113, almost 113.20. But then we saw a gradual fall back on Friday. We reached a low of 112, dipped a bit below that. Now we're seeing it recover once again. It's at 112.50. But all in all, if we look at the bigger scheme of things, this is range trading. So we had a false break above last week's highs of 113. And then, well, that's it. We're back to range, back to the 111, 113 range. So it's not that exciting. Okay. Good morning, Alec. Looking forward to your questions. Good morning, Albert. Good morning, everybody. So that's euro-dollar. Okay. Let's see what's going on with pound-dollar. The reaction is also here quite similar. We've seen this rally here on pound-dollar all the way up to 152.40, and then it fell down, and then we're seeing it climbing back more or less to the same levels and even higher. So this is a bit different. Finally, we're seeing the pound recover. I think there are good reasons for the pound to recover because the economy in the UK is doing better. But also here, and another reason is that the pound fell so much last week. So, well, what comes down must go up. Dollar yen. Also here, we've seen the same reaction. I'm repeating this on every morning. It's hugging the 120 level. It's currently at 120.20. We've seen a really sharp fall here to 118.70, and then we've seen it climb back up. In the bigger scheme of things, we had a false break up to 121.20, and then breaking down to 120 under 119, and now back to hugging the same line. Okay, so this is sort of the picture in many markets in the major pairs. In commodity currencies, they're doing a bit better. This is dollar CAD. Well, this pair also similar to the pound, but in the other direction. Well, same direction actually. It reached a new 11-year highs. That means new 11-year lows for the Canadian dollar, 34.60, and then began climbing down. Non-farm payrolls helped it fall down, and then it even extended its falls. So the important line to look at for dollar CAD is 130. We're still quite far from that at 131.10. I think this is a bit exaggerated for a few reasons. The Canadian dollar is dependent on the US economy, and the price of oil is still quite low, and we're seeing even more production from Arab countries. So I don't think it'll help the Canadian dollar. But at the moment, markets are thinking, okay, there's no rate hike in the United States, more money printing from other countries. It's good for risk assets, good for commodities, good for commodity currencies. Same thing goes for Australian dollar. We've seen this double bottom here at 69.35, hugging 70 level, moving up on the non-farm payrolls, then moving back down to 70, and now recovering again on the better mood in markets, on the thought that everybody will keep on printing, on the fact that stock markets are going up. So we're at 70.90, just under resistance at 71. Okay, support at 70.40, and further resistance, I see it, here at 72, which is a round number, but then only 72.70, which was the post-Fed high. Kiwi dollar, yeah, same story with commodity currencies, continuing the recovery. We've seen it struggle with 63.10 last week, then rise above 64, then hesitate around this level because the reaction wasn't so clear, the non-farm payrolls. And now when the mood is improving in markets, we're seeing the Kiwi rise above 65. Let's look at other currencies. Well, the dollar is sliding now also against the franc. Again, because the franc is very close, trading very closely to the euro, we're not seeing a crazy reaction. So we saw it fall from almost 98 to under 97 to 96.50 on the NFP, but then recover again, and now it's stabilizing in more or less range trading. So we see major pairs, euro, pound, yen, and also the Swiss franc, sort of a bit stronger against the dollar, but not that much. While commodity currencies, the Aussie, the Kiwi, and the CAD are doing quite well. They're making nice gains. Euro Swiss, very boring pair in my opinion. Well, it used to be crazy back in January. Anyway, 109.30 and trading in quite narrow range between just under 110 and 180.70. Euro pound already more interesting. It reached new highs last week, reached 74.40, but then also fell back to the previous range right here, just under 74. 74 is still a battle line as far as I see it. Economic situation in the UK is better than in Europe, but we've already seen the cross fall quite a lot, so I'm not sure we'll see any more. Another stable pair is the safe haven couple, if you want to call it this way. We're also seeing it move up a bit because, well, euro is doing better than the yen now, but the range is still limited. We're still under resistance at 135.40 and support at 133.15. And many people's favorite, the Gepi, well, better mood in markets means it's moving up. It's also, here we did see quite a nice reaction to the NFP. We saw it make some kind of a false break under the 181 support line and then climb back up. Why did it fall? Well, the yen is a safe haven currency. It's strengthened really nicely against the US dollar. The pound isn't, so it fell, but then it recovered. Now it's even going higher. So 183.50 is resistance, and followed by 184.35 and 186. On the downside, we have 182.50. 182, 181.50, and 181. Quite straightforward. Okay, let's continue. Say good morning again to Albert Alec. A few regulars here that didn't wake up on a Monday morning, but we're looking forward to all of your questions. Let's talk a bit about other things in the markets. So we have the terrible NFP, but maybe I didn't explain why the reaction was what had happened. So, morning, this is me here. Hope the lighting is better than last week. Did some effort to improve that. Anyway, we had terrible non-farm payrolls. Nobody was expecting it, okay? So it was bad on all fronts. The only good thing was that the real unemployment rate, the U6, continued dropping from 10.3 to 10. But in the bigger scheme of things, we had poor job gains, bad revisions, bad wages. Now, you can say, well, it recovered. The US job growth is slowing down because the US is closer to full employment. I say forget about that because the participation rate is lower. So all in all, it was a terrible NFP. If you were close to full employment, we would have seen wages rise, right? Anyway, dollar fell, and why did it recover so fast just after a couple of hours? That's because the United States is still a world leader, at least in terms of the economy, okay? So we've seen if the United States cannot lead the world into better growth, better prosperity, then what will the others say? China is slowing down. Europe has its own problems. So if the United States isn't going to raise rates, maybe maybe we're going to have more stimulus from the Bank of Japan, maybe from the European Central Bank. We'll hear from these two central banks later on this week. I have a question from Alec saying, do you think you will have ranges and stop runs until after the October FOMC, even though everybody and their dog knows no hike in 2015? Well, thanks for the question, Alec. First of all, I'm not sure we're not going to have a hike in 2015 because we still have 2 more jobs reports in November and December, and things could still improve. Yeah, I guess after this bad report and the slowdown in China and the other bad figures, you say, well, it's impossible. But I still think it's possible. We still haven't heard responses from the Fed regarding this jobs report. Regarding October, of course, nobody expects, and I'm in this camp, nobody expects a rate hike. Ranges and stop runs. No, I think we'll have other central banks reacting as well. It means let's look back at the events awaiting us this week, and then I'll explain why I think we'll still have action from other banks that will have maybe not the dollar rising and falling against all the currencies, but more individual currencies will be hit by their own central banks. Okay, so let's go back to the events for today. Let's skip them and go to more events next. On the agenda tomorrow, we have a rate decision in Australia. Okay, most market participants don't expect another rate cut because the Reserve Bank of Australia has been quite sort of optimistic about the economy. Not optimistic, but sort of seeing the situation as okay, seeing the fall of the Australian dollar finally in line with the fall in commodity prices. And nobody expects a rate hike now, maybe in November, but there's a low chance. Now, with lower chances of rate hike in the United States and the fresh rise of the Australian dollar and the potential for more rises, I don't think the Australian dollar, the Reserve Bank of Australia is going to cut rates, tomorrow morning. But I do think that they might change their language on currencies. They might say Australian dollar needs to fall further given the fall in commodity prices. The fall in the Australian dollar is stopped. They'll probably say it in some kind of weird language, but the markets will get it that they're not happy with the value of the Australian dollar, and more importantly, that they're ready to act if the Aussie doesn't continue falling. Okay, now talk more about major pairs. We have tomorrow also a speech in the evening. We'll talk about that more in detail tomorrow, but by ECB President Mario Draghi. Now, the last thing we heard from Draghi is that we're expecting economic growth and a message in general that they're not very keen on acting soon. They have to wait and see. Okay, so the markets expect the ECB to act only in December, if at all, because in December they have new forecasts. But there's another meeting in October, like the Fed, 1 week before the Fed, on October 22nd, and the ECB might hint at this meeting that they're ready to act. They can act either by expanding QE or by extending it, or both. So maybe already tomorrow we'll hear from Draghi that they're worried about the situation and ready to act. Okay. On Wednesday we have a decision from the Bank of Japan. Given the recent slowdown in Japan, given retail sales, industrial production, inflation outlook quite weak. Also, the Prime Minister's ratings are low. Shinzo Abe is not doing so well in the polls. So we might have more monetary stimulus to boost the economy. We'll probably wait and see if Japan really fell into recession, but we might hear from them already this week that they're ready to act at the end of October. Okay, maybe that'll take dollar yen out of range. But that's not it for this week. We have also on Thursday If you can see here on the screen, decision by the Bank of England. They're not expected to move at all, but we're going to have the meeting minutes released together with the decision. Okay. So last time we had one member voting for a rate hike, that was Ian McCafferty, and the other 8, including Governor Carney, voting to leave rates unchanged. But if we hear that already 9 members don't support a rate hike, or if one member supports any kind of rate cut or more stimulus, then the pound is going to fall. And on Thursday, we're going to also hear from the Fed meeting minutes. These meeting minutes came from before the NFP, of course. So maybe markets are going to look at it with a grain of salt. But they could also talk about raising rates in December, because if you remember in the September meeting, we had 13 members still seeing a first rate hike in 2015. And even if this text is repeated, and even if the markets know that it's a bit old, this figure, then of course we're going to still see a positive reaction for the US dollar, and we might see a break of ranges also in other pairs. So that was a very long answer to what I expect to see from other central banks later this week. And so I think, I'm not sure every central bank will act, but those that will act will have, of course, a negative influence on their respective currencies. So I'm not sure we could see a breakout of ranges. Okay, so let's go from later this week to what we're expecting today. Just in 14 minutes time, we'll have the UK services PMI, which is an important figure for the British pound. First, let's look at where the pound is trading against the dollar at the moment. 152.25. We're going to cover this event during the show, of course. And let's see what we're expecting. So we had last month we had 55.6 points, and this time we're expecting 56. More of the same. Any figure above 50 points reflects growth. Under 50 reflects contraction. A score of 55, 56 reflects solid growth, good growth, a healthy environment. Okay, so let's see if it's really that good or if it's not that good, and that could have a significant impact. Why? The services sector, well, in all the developed world, it's the biggest sector and most influential in the economy. And also we've seen in the past that the services PMI had a big impact, either positive or negative, on the US, on the respective currency, in this case, the British pound. Okay. Before the UK, we had similar figures from Europe. Okay. So we had in Spain, services PMI missed quite a lot. It fell by 5 points from 59.6 to 54.6. That isn't really good news for the Spanish government. There are elections coming up in 2 months. So, and also it shows some kind of a slowdown in the service sector in Spain. Also in Italy, we had a disappointment, 53.3. In France, we did finally see some better figures, had a beat with almost 52 points. Germany, we had a small miss. I wouldn't take that too seriously. And for the whole Eurozone, we had 53.4, which still reflects some kind of growth in the services sector, which is doing better than the manufacturing sector, just a bit. Okay, so these are the figures we had beforehand, but let's see if we had an impact on the euro. Not so much, no. But for the UK, it has a more meaningful impact, because for the UK, it's the first release, the first and final. Well, for Germany, France, and the Eurozone, it's the second, it's the revision. For Spain and Italy, it's the first. Okay, so this is an event coming up today. The next one, I think the most important one for today, is the services sector figure for the United States of America. Usually it comes before the non-farm payrolls and has an impact on shaping expectations. It always moves the dollar. This time it comes afterwards, so it doesn't serve as a hint to the NFP, because we know the NFP has been terrible, but it still serves as an indicator of the US economy. So that's at 2 GMT. Let's see what we're expecting. ISM non-manufacturing PMI. Where's that? Okay. So we had 59 points last time, which reflects very strong growth in the sector. And now we're expecting 57.7, which is still very good. We might see another disappointment here, okay? Together, 15 minutes before that, we have the market, the same figure, but from another company, from market. And they're expected to show, confirm the previous number of 55.6, maybe an upgrade to 55.7. Market has less impact in the United States than ISM, so the bigger event to watch is at 2 GMT, the ISM non-manufacturing PMI. Okay. Other figures. Let's see the agenda for tomorrow as well. We talked about the rate decision in Australia. Before that, we have trade balance for those of you trading at night. Well, at night here, at least in Europe. Trade balance will also have some kind of impact. And before the show tomorrow, we have factory orders from Germany. That's usually quite a volatile figure, but it still has an impact on the euro. Many people see euro dollar as sort of reflecting reflecting the euro, the German economy. So if you're trading euro by Germany, that's an important figure to watch. Speaking about euro dollar, I'll put up another chart here, which shows a nice pattern on euro dollar. Hope you can see that. So that's a triangle I put on euro dollar. So we're seeing it trade right here. We've seen this steep downtrend resistance starting from the peak back then in August when we had the Chinese stock market crash, being formed right here in the previous rise that we've seen earlier this month, last month, sorry, and then once again touched here just last week. That's the daily chart of euro dollar. That's on Friday. On Friday, we had an attempt to break downtrend resistance, and this failed. Okay, so now we're still in the higher end of this triangle, of this wedge, but I'm not sure we'll have a breakout. Currently, it stands on just under 113. So it'll be interesting if we see a break above uptrend resistance. On the downside, we have a much more moderate support line, but very steady as well. So I think it's quite strong, accompanying us from the lows that we've seen earlier in September, and then continuing to support the pair along the way. That's sort of a technical pattern I'm watching on euro dollar. Good morning to you, Stuart, as well. Looking forward to all your questions. So that was euro dollar triangle. You want me to cover more charts, more fundamentals while we wait for questions? Let's talk about the bigger themes in markets. NFP. Okay. One thing that is sort of always on the back burner is Greece. Greece was in crisis, big crisis that captured the headlines, especially in June and July. We've remembered another deadline, and finally the leaders spent 17 hours, an all-nighter, and finally cut a terrible deal, which means more austerity for Greece, less chance of Greece paying its debt. I think it's a deal that was meant to fail. Since then, the Greek parliament approved what it had to approve according to this kind of agreement that was forced upon Greece. And then we had elections in Greece. Prime Minister Alexis Tsipras won them. It was back on September 20th. Since then, we have a new government in Greece, and now we're awaiting the first review. Why is the first review so important? Because after the first review, the question of debt sustainability, debt relief is supposed to be on the table. So far, the International Monetary Fund, the IMF, has not jumped in. This is not the Troika this time. It's only officially the ECB and the European Commission. And since the ECB works for, well, Europe, then it's basically only Germany, or maybe only the Eurozone, but led by Germany, calling the shots. They would really, really like the IMF to be in. That's what Merkel promised her parliament in Berlin, that the IMF will be part of the third bailout. And we have talks now in Lima, in Peru, this IMF gathering. The IMF doesn't participate in the Greek bailout because there's no debt sustainability. The IMF sees Greece's debt ballooning to 200% debt to GDP ratio. And they want to see some kind of debt relief for Greece, some kind of haircut, some kind of maybe restructuring. And Germany, of course, doesn't want that. So we're already hearing news that Greece is not fulfilling its obligations, and that the review might be dragged on and on. There were talks it would end in October, maybe November. Now there's fresh talk it'll end to December. So I see that as a extend and pretend thing. Currently, it has no impact on euro-dollar because we're not in crisis mode, but it's something to watch out for. This week we have both the Eurogroup meetings today and tomorrow, and the IMF meetings in Lima later on in the week, towards the end of the week. So it's another theme I'm looking out for. Let's put the other themes back here on the screen. We have, well, for those trading the Aussie, this one of the reasons that the Australian dollar is rising. And it's not only the bad NFP in the United States, but also the fact that China is on holiday. So we have no bad news from China. It's the golden week in the world's second largest economy. So in this case, it's no news is good news. And of course, bigger theme in the markets, we've talked about that before. As a result of the weak non-farm payrolls, some see a Fed hike only in March 2016 or never. Stuart mentioned here that, Alex mentioned here that probably there's not going to be a hike in 2015. So more and more commercial banks are coming out with forecasts saying it'll be only in March. Also, the bond market reflects that, but well, I think it's still to be seen. And another, we had overnight developments. We have a question. Good morning to Jax R. Wild. So, Jax R. Wild asks, is everybody just numb to Greece now? The answer is yes. Clearly, we're not in crisis mode, so that's how things are playing out. There's so many other things to capture the attention of the markets. We had the crisis in Volkswagen, which also endangers the German economy. The refugee crisis, which could be, more refugees could be good in the long term for the German economy, but not the short term maybe. We have falling of commodity prices. Luckily, China is closed, so we don't have more falls in the Chinese market. We have, well, things in Syria going on, and none from payroll. So Greece off the agenda for now, but I'm just keeping you a bit up to date, so you know sort of what's going on behind the scenes. It can explode at any moment. I believe it'll be only next month in November. So I hope this answers your question. Just to keep you up to date with Greece. Let's see what else I've prepared. More news. Talked about next week's events. Well, it's just time for the figures from the United Kingdom, the services PMI from the UK. If we have a fresh figure for you. No, it's still 1 minute to go, less than 30 seconds to go. So we'll see, just take another look at pound dollar. Pound dollar trades now at 152.20. And let's look at one of your favorites, pound yen, which in the, let's put the 30-minute chart, which has fallen a bit off the highs in the past hour or so. We're currently in 182.77. Maybe that move above 183 was a false break, but we'll get in a few seconds the figures from the UK. So yeah, we have a disappointment in the UK. That's why we're seeing this fall. And we have only 53.3 points. That reflects much slower growth in the most important sector in the United Kingdom. So we're seeing pound yen fall. Actually, it's a false break, right? Above 183. The low that we've seen so far is 152.50 more or less. Pound dollar is on lower ground. It's not a huge fall. It's still in range, and we've seen the pair climb just before the release. But now at 152.20, it doesn't. Sorry, 152.07. It doesn't look too good. Let's also look at euro pound. Also here, we're seeing a move above 74, above the previous narrow range we've seen the pair this cross trade on. The peak last week was just under 74.50, and we're not there yet, but we're seeing the pound slow down. And will this impact the decision of the Bank of England on Thursday? Will we see Ian McCafferty, that wanted a rate hike, change his mind and say no? I'm not sure. We had good wages in the United Kingdom as well, so Britain maybe is paying a bit better than the United States at the moment. We'll have to see about that. So that's the news from the UK. Euro dollar is still at 152, at 112.58. Anybody has more questions? So let's look a bit more at a few charts. At the moment, lines we're looking at here in euro dollar, 112.57 at the moment, 112.90, 113 is now on the upside. We had a high of almost 113.20 on Friday, but the bigger level that I'm watching on euro dollar, if we do have a break to the upside, is 114.60. Why? Look at this thing. Here back in May, we had the pair peak at this level. This was the post-low peak. So we had in March, we saw euro dollar fall all the way to 104.60, and then we had 1,000 pips higher. Okay, so after 1,000 pips, the pair fell back down, trading range. Here in August, we had this swing high on the crash of the Chinese stock market up to 117.12, but then we fell back to range, and then this next peak post-Fed was 114.60. So this is a double top. This is 1,000 pips over the lows of the year, the lows of over a decade, actually. This is a really critical level. Another level I'm watching a bit below is 113.75. And this has been low also back in 2003, and also peak here in April, May. So I'm looking at this level. On the downside, the really important level to watch is 108.10. That's sort of the bottom of the range. We've seen that level back in July, and these are the big levels. But again, I think euro dollar is still looking for directions or off the lows, but I'm not sure the direction is up. A lot depends on the currency wars. Which central bank is more dovish? Which one is more pessimistic on the economy? Which central bank is ready to do more? I think that after we had a weak NFP, we might hear worries from Draghi as well. Let's look at the bigger scheme of things in pound dollar. Here we've seen these devastating falls. So we had these 9 days of falls back in August, and then another 8 days or so falls back here. It's quite tough, right? Anyway, 150, the round number, is of course all important support. On the top side, we have the recent highs of 152.50, and then just around 153.70, I would say. That's right here. That would be a better place to put the line. And 156 is important resistance. Dollar yen in the bigger scheme of things. boring, 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 hugging 120. Well, on one hand, there are some traders who get bored by these kind of levels because the pair is going nowhere fast. Some other traders that aren't looking for the big pips just use it as no, the pair is trading in range. So if it goes down to the bottom of the range, then it goes up, and the other way around. So 120, 120 is the top, and now 118.70 is the bottom. Usually after these kind of things happen for a long time, we have the pair exploding to one direction or another. I have a question from MC. MC asks, can you explain dovish and hawkish? Sure. So what does it mean to be dovish or to be hawkish? To be hawkish means to be more tough. And in this context, from a central bank, it means fighting inflation in a stronger manner, being more aggressive towards raising rates. That means less printing money. And this also means a stronger currency. So in the Federal Reserve, members that are hawkish support a rate hike now. We had Jeffrey Lacker, for instance, voting for a rate hike in September. And because Jeffrey Lacker is a hawk, he's hawkish. Okay? Dovish is just the other side. When central banker is dovish, it means he supports looser monetary policy, more support for the economy. That means cutting interest rates or printing more money. This is sort of, and we had this, for instance, from Charlie Evans of the Federal Reserve. He doesn't want to raise rates in 2016. And another member, Naranja Kocher-Lakota of the Minnesota Fed, he wants to cut interest rates in the United States to negative. So he's an extreme dove. Okay, so that's how I see things. I mean, these are definitions. Yeah, we have a comment from Jax R. Wild saying that the yen is a very controlled pair, though. What do you mean by control, Jack? Do you mean that there's lots of intervention by the Bank of Japan, or do you mean many people are watching that, or just the range trading, sorry, is a bit too tight? Talking about, if you refer to the ranges, I certainly agree they're very tight, and we're seeing this as a pattern in dollar yen. We're seeing the pair trade in very narrow ranges for a very long time, and then going wild, shooting somewhere. So we've seen this here in this zone here on the chart in the spring, March, April, May. We've seen narrow range trading, then boom, shooting up to 125. Now we're seeing sort of more of the same. We've seen beforehand it trade in higher levels and then fall down sharply and settle around here. So that's sort of what's going on in dollar yen. Good morning, Stuart. Yeah, hi, I missed the beginning of the webinar. Can you summarize briefly odd context again? Let's do it a bit. I'll answer Jack's comment first, and then Jack says bank controlled, most of the controlled pairs in the majors. It's a bit controlled by the Bank of Japan, yes, because we're seeing interventions, quite a lot of interventions from the BOJ, but it doesn't intervene all the time. The Swiss National Bank intervenes much more. Okay. Oh, sorry, I didn't show the chart beforehand. And let's go back to the chart, and I'll mention again the levels seen here. So we had range trading, breakup, range trading, breakdown, range trading. Another question from Stuart about the Australian dollar. Australian dollar is trading now higher in range. We've seen it hit a double bottom last week. That's what you wanted me to talk about. Then hugging 70, rising higher on the week non-farm payrolls in the United States, but then falling back to 70. And now when the mood in markets is doing better, we're improving. There's a rate decision in Australia, and I think we could have the Australian Central Bank, the RBA, be a bit more dovish, a bit more talking about that the Australian dollar needs to fall more. A question from Albert. Why is euro yen, as they say, called safer for trade? Well, maybe I don't think it's safer for trade. Well, it may be safer because it doesn't move too much. I call it the safe haven couple. That's because the euro is a safe haven currency, and so is the Japanese yen. Japanese yen is traditionally safe haven currency because it was always a funding currency. So in times of trouble, money flows back. You just click the undo button if you wish, and money flows back into Japan. But in the euro, well, it has also become a funding currency thanks to the ECB's actions that with the negative deposit rate and the enormous QE. So in good times, money is lent cheaply in Japan and in the Eurozone to go to riskier assets, and in times of trouble, it goes back. So this cross euro yen reflects, it doesn't move too far because both currencies have similar patterns. When we have trouble, both currencies strengthen against the rest. When things are good, both currencies weaken against the rest. So, of course, we are seeing some movements, but nothing extreme. Didn't RBA just hike not long ago? The RBA hiked, if I'm not mistaken, last time back in 2013. But recently it did cut rates, cut it back down from 4.5 to 2.5. That was the previous round, and now during this year it cut it twice from 2.5 to 2.25 and then to 2%. But recently, after the huge fall of the Australian dollar, it changed its language and stopped complaining about the strength of the Australian dollar. I think they'll resume their complaints quite soon. Because first of all, it stopped falling, but commodity prices didn't. So this is sort of long-term huge fall in Aussie dollar. Okay, so I think it's time to wrap up for today. Let's go back to the presentation. So this is the wrap for Monday, October 5th. I'm Yohay Elam of Forex Crunch, Market Movers for FX Street. We had a terrible non-farm payrolls on Friday with all the wrong figures, weak job gains, negative revisions, wages not going anywhere fast. And this, of course, hurt the US dollar across the board. We had euro dollar, of course, jumped above 113, but then we had second thoughts of the markets, and they said, okay, if the United States isn't leading the world, who can? And the United States dollar strengthened once again. Okay, that was the big event. We are still feeling the echoes of it today, and we'll still hear about that towards the rest of the week, especially when we have the FOMC meeting minutes on Thursday. Other developments, talks resume about Greece. It's currently in the back burner, but we talked about that. China is on holiday, so that allows the Australian dollar to rise. We have an important rate decision in Australia. I think the RBA is not set to cut the interest rate, but they might change their language, be a bit more cautious about the economy, cautious about China, a bit more worried. That could maybe send the Aussie dollar back down. Talk about the Fed hike in the context of the NFP. Markets moved it to March, but we're still expected to hear from the many Fed officials, and then we might see more reactions. We had UK services PMI miss expectations, hit 53.3 points right here, and that hurt the pound just a bit against the dollar, euro, and yen. And most important event of the day is the ISM non-manufacturing PMI at 2 GMT. We're expecting 57.7. Still expecting strong growth in the services sector, but as we've seen from other countries, I'm not sure we'll get that quite fast. And a quick look at currencies. Dollar is weakening once again, but a bit more against commodity currencies than the rest. Euro dollar still in range a bit higher. Pound dollar, was beaten now by the services PMI. Dollar yen hugging the 120. Dollar CAD falling quite nicely to 131. still above support at 130. Aussie dollar getting close to resistance at 71. And Kiwi dollar broke earlier above 65, which is an important level. So that's the wrap for today. I see we have a few more questions, so I'll try to answer them quickly. We have Albert asking, thanks for the answer, good point. During the NFP last Friday, I saw the euro go very high, but nobody was buying it. But it was still was going up like a rocket. How come it goes so high when nobody is buying? It felt like it was swimming against a tsunami. Okay, so well, the first reaction was of course crazy because we've seen terrible reports, so everybody was selling the dollar, but we didn't see a real breakout because, as I said, eventually people were buying it initially, but then not buying it. So we've seen it fall back down because for instance, we might hear from Mario Draghi later this week that the situation is worse and they're ready to act and it might hurt the euro. So I hope this, I don't know who didn't buy it. Many people bought at the beginning, but then they were taking profits or getting second thoughts. Jake, good morning, asks, is it possible that Yohay and Co. will continue to talk as they have been for a year already and will continue to talk, but no action? Of course they can. That's what central banks do. It continues the question, at what point do you lose credibility? Oh, that's a great question. Part of their job is to bring more certainty to the exchange rates and to manage expectations. Wouldn't you say that they failed if they keep everyone hanging for a year, continuing to say this year for more than a year? You're absolutely right, Jake. I think that if you continue talking, it's like well, the famous legend with the wolf. You're crying wolf and nothing happens. So it might they might lose their credibility. At some point, I think they could just hike just because they put themselves into this trap of hiking. But I think there are also good reasons to hike. First of all, there is a chance of a bubble because you have easy money going into stocks, to stock buybacks, to housing. You don't want too much of that. And also, eventually, the United States economy is still growing. You have more jobs gained. Eventually, you'll have more salaries, more inflation. So they should get a bit ahead of the curve and act before it's too late. Okay, I hope this answers the question. Of course, they can lose credibility. So welcome, Stuart. Welcome, Albert. Thank you very much for the kind words. Say the pips may be with you. So that's it for today, for Monday. It's a busy week, not only because of what we had last week, but because of what we'll have this one as well. So that's it for today. I wish everybody that the pips will be with him, as Albert says, and good luck and goodbye.